Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Fortune Real Estate Investment Trust Annual Report. And Fortune Real Estate Investment Trust is a real estate investment trust that was established in 2003. As the first REIT to hold assets in Hong Kong, it is listed on the main board of the Stock Exchange of Hong Kong Limited. Fortune REIT's portfolio consists of 17 retail properties, including 16 private housing estate retail properties and one neighborhood mall located in Singapore. The trust holds a significant amount of retail space, approximately 3 million square feet, as well as 2793 car parking spaces. This extensive portfolio provides a range of businesses and services to its customers, including shopping, dining, and entertainment options. Fortune Real Estate Investment Trust, Fortune REIT, has experienced a significant surge in its stock price over the past year, with a notable 31.84% increase in performance for 2025. Several key events and positive developments have contributed to this rise. One of the primary drivers behind Fortune REIT's stock price increase is the positive analyst ratings and outlook. In March 2026, CD maintained a buy rating on Fortune REIT and raised its target price from HKD 5.56 to HKD 6. Citing year-on-year improvements in tenant sales and foot traffic across most industries. In addition to positive analyst sentiment, Fortune REIT's sound financial health and optimistic leasing outlook have also played a significant role in the stock price increase. Despite a slight dip in income available for distribution and distribution per unit, DPU, the company maintained a healthy balance sheet with a gearing ratio of 26.9% as of December 31, 2025. Furthermore, Fortune REIT's consistent high ESG rating has positively influenced investor perception and long-term stock value. The company achieved a 5-star rating in the GRESB assessment for the 4th consecutive year, demonstrating its commitment to environmental, social, and governance (ESG) performance. The strategic capital management of Fortune REIT has also contributed to its financial stability, with the company actively managing interest rate risk and debt maturity profiles throughout 2025. The issuance of new units for fees during 2025 indicates ongoing operational activities and management compensation structure. Overall, a combination of positive analyst sentiment, strategic operational management, a healthy financial position, and a favorable market outlook have likely been the driving forces behind Fortune REIT's stock price increase over the past year. Fortune Real Estate Investment Trust market capitalization of $10 billion is materially smaller than most of its industry peers, of roughly $15 billion. Fortune Real Estate Investment Trust trades at a higher price-to-book ratio of 0.4 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 30% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The company have a dividend yield of 7.28%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various market and consumer factors. On the growth side, improved consumer sentiment and stronger market momentum have contributed significantly to increased visitor arrivals, growing retail sales value, and robust tenant retention rates. Proactive leasing strategies and targeted marketing campaigns have also played a crucial role in driving revenue growth. The introduction of innovative features such as Fortune Mall's app usage and loyalty programs has further boosted revenue. In addition, asset enhancement initiatives at key locations like Waldorf Avenue and Laguna Plaza have attracted good interest and improved occupancy rates. Thematic promotions and spending rewards have also been effective in driving sales. E-voucher redemption has provided an additional revenue stream. On the decline side, negative rental reversion, particularly for supermarkets, has had a significant impact on revenue. Modest declines in footfall due to shifting consumption patterns have also contributed to revenue decline. These factors highlight the importance of adapting to changing consumer behavior and market trends to maintain revenue growth. The company's net income experienced a slight decline of 0.1%, dropping from HK$723.4 million to HK$722.9 million. This change can be attributed to the impact on profit margins, which were negatively affected by two key factors. A significant contributor to this decrease in profit margins was the decline in net property income, which fell by 5.2%. This reduction in revenue had a direct impact on the company's overall profitability. Additionally, the cost-to-revenue ratio increased by 1.2%, further eroding profit margins. As a result of these factors, the company's profit margins suffered, leading to the slight decrease in net income. The company's financial performance indicates a consistent trend of generating positive operating cash flow. In the year 2024, the company recorded an operating cash flow of $96,646, demonstrating its ability to generate sufficient funds from its core operations. This trend continued in 2025, with an operating cash flow of $65,738. The steady generation of positive operating cash flow is a testament to the company's financial stability and efficiency. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, while the property valuation has decreased by approximately 4%, the gearing ratio has increased slightly from 25.6% to 26.9%. This suggests that despite a decrease in non-current liabilities, an increase in current liabilities due to higher borrowings has offset some of this reduction. Furthermore, there is an increase in derivative financial instruments, which may have contributed to the overall change in debt level. Regarding interest expenses, finance costs have decreased by 14.4% year-on-year from HK$396.9 million to HK$339.9 million. Additionally, interest expenses on bank borrowings have also decreased from HK$541,129 to HK$393,140. These reductions indicate a decrease in the company's interest expenses over the past year. Management is confident about the company's prospects in navigating the changing retail landscape of Hong Kong. They attribute this optimism to the stable economic environment, which provides a solid foundation for growth. To capitalize on this opportunity, the company will focus on three key areas: proactive asset enhancement, disciplined cost management, and sustainable long-term performance. By enhancing its assets, the company aims to stay competitive in the market while maintaining a strong financial position through effective cost management. This approach is expected to yield sustainable results over the long term, positioning the company for continued success in the face of industry transformation. That concludes the financial summary for Fortune Real Estate Investment Trust. Feel free to comment below, and I will be happy to answer them when possible.